right? Are you gonna do it? I know you qualify. Are you gonna do it? Is your circumcised? Are you gonna do it? Just get yourself untied. Are you gonna do it? Feel the heat pushing you to the side. Feel the heat burning you up, ready or not. Some fight it hot and some sweat when the heat is on. Some feel the heat and decide that they can't go on. Good morning, everybody. Happy Thursday. It's February 2nd, 2023, Groundhog Day. Happy Groundhog Day. Looks like Punxsutawney Phil saw his shadow this morning, and we have 6 more weeks of winter. Fantastic, right? If you're from the New England area like I am, you're yearning for the weather we had last weekend where I was at in Jamaica, where it was in the 80s. I think this weekend we're going to be into the negative temps on Friday night, Saturday morning. So, boom, keeping my sweater on and my jacket on, my gloves on, and everything. So, welcome everyone. Happy to have all of you here. My name is Bob Lang, and every Monday, Thursday, I do these daily bites talking about the markets, the economy, the Fed. Like we'll talk about the Fed meeting yesterday. What I see coming up in the short term, earnings as well. We got a big earnings slate coming out today. We'll talk about that too. So, first of all, let's go ahead and dive into the markets here. So we see this morning a bit of follow through from yesterday's really strong rally at the end of the day. We'll get to that chart in just a second. We'll see the S&P futures up about almost 28, 29 points. The Dow up down about 30, and NASDAQ up 200 thanks to the big surge after hours yesterday in Meta, and this morning we see Meta's up about 19%. I wanted to share with you a trade that I put out there yesterday in the chat room. So a lot of you may or may not know that I run a chat room regularly during the day. So this is a trade that I put in there yesterday in the chat room. Everybody saw it. You can see right here. Bought a couple of Meta Feb 145 calls at $10. And so you can just do the math here with the stock trading at 182, 182, almost 183. The difference between that and 145 is almost about $40. So these may open up at about 40, 30, between 37 and $40 today. And I'm planning on taking those off the board. So nice 400% winner overnight on these calls. So this is the sort of stuff that you're going to get on a regular basis in the chat room, not just from me, but from some other extremely smart, brilliant people in the room, including people like Leanne and Rick and Shri, and David and John H, TJN as well. We've got a lot of really great people in the room. Jose, one of the newer players in the room, has done extremely well. He's a brilliant trader, especially to the downside. Craig as well, a big Tesla trader. Brian. So you can see all these people. Christopher, all these people in the room. They're staples. They're big players in the room, and they really participate and bring it every single day. So if you're not in the chat room, this is the place you want to be to not just make some money, but to learn as well. All right, so let's talk about what's happening over here. So we see a little bit of a move upwards in some of these other tech names as a result of the Meta earnings last night. We see some strong movement in Amazon already this morning, and in Google. And of course, those two names have earnings coming out later tonight after the close, along with Apple and Qualcomm. So these names are going to be paying very, very close attention to. Also be watching Starbucks as well. Tomorrow morning, we have earnings coming from the Cibo, Regeneron, Cigna, and Sanofi. So these are also a couple of names. Now, how does the market look right now as it relates to an overbought, oversold condition? It's pretty overbought right now. I'm not going to lie; it's very overbought right now. But does overbought necessarily mean that we have to go down? No, and yes. All right, we don't have to go down, but we can go down, right? I guess the rephrasing that question, what could the markets do from an overbought condition? It could keep going, or it could slide, it could come down, right? We are not in the business to try and predict when those things are going to happen. I think the best things we can do, and this is how I've adjusted my strategy and style over the years, is to pay attention to what the market momentum is doing and telling you. Follow the price action, follow what's going on. We could always have these notions in the back of our heads about what should be happening, but what should be happening should never be the driver of how we trade and how we put our money and our capital at risk, right? We shouldn't have these notions of, well, the Fed is doing this stuff wrong. They're raising interest rates, and you see inflation. All these things are true. I'm not just or they could be true. Not going to dispute that, but does it directly relate to what's happening in the marketplace? No. What really directly relates to the marketplace is money flows, liquidity, and price action. That's all you really have to care about, right? And so maybe Powell said some things yesterday that were perceived dovish or whatever. Let everybody else try to explain that. All we need to do is pay attention to what the price action was. And let's take a look at that for a moment. Yesterday, all right? So we're going to look at the futures chart here, right? Let's go back to yesterday. All right, this was last night, yesterday, all day over here. And we got this big bar that hit right after the Fed decision came out, right there, right? Or actually, this is right after the Fed reaction. We dipped, and then all of a sudden the press conference gets going, and we had this big bar that hit from 40.60 all the way up to 40.96, 36 handles in 5 minutes, right? And if that didn't trigger you to do something to at least notice it, well, maybe it was the next bar, right? That took you all the way up to 41.12 from 41.96. So another 16 handles on top of that, 36 and then 16. So in two 5-minute bars, these are 5-minute bars, 2 5-minute bars, you got 50 something handles to the upside, right? And if you know me, I like confirmation. So really, I got confirmation from this bar to this bar. I was starting to add stuff in here, and then I felt a little bit more comfortable adding more stuff on the second bar. And we continued to rise up, and they jammed it higher right into right near the close and pulled off a little bit. But then, of course, when things opened up after the Meta earnings, we went much higher, and we're catching the short people who are short on the wrong side of the bed this morning. So, and again, another thing you needed to pay attention to was right after the Fed meeting. Look at the bottom pane over here. This is volatility, the VX, right? And we saw a big pop over here, and then a big drop right out here. Right at the see the timeline over here at the end of the day yesterday, right when Powell's speech started, or on the press conference. That was this bar right here, and we just kept making lower lows. People were selling volatility. What happens when people sell volatility? They take the other side of the trade on the futures and they buy the futures. Sell vol, buy futures, right? And that's what happens. If you're short ES futures, you had to come back in there and start buying the futures at a higher price. Okay. So you get that combination there. It's a wicked combination. If you're short, good luck. But all I needed to do is pay attention to the price action, right? Pay attention to that price action, and that was going to tell me everything I needed to know about how to proceed. All right. So let's talk a little bit about the markets again in general, and where sentiment is at. You can see here that the McClellan oscillator, the New York Stock Exchange, is at plus 180. We're at plus 219 on the NASDAQ. Pretty overbought here. We were overbought towards the beginning of January, and we came back down, corrected a little bit, but we didn't quite get below zero last week, and now we are up over 180 and 219. We're probably going to get pretty well overbought by the end of the day today if these gains hold on. As we know, Tuesday was the end of the month, and we always like to check on the monthly calendar on the S&P 500 to see where are we in a bull market or a bear market. Well, according to this indicator, we're still in a bear market, right? Even after January's close, right? So January's close was pretty strong. It was an inside month, but we closed near the highs of the session for January. Strong month of January. We're following through in February after yesterday's first day of trading. But we still have this discrepancy in the MACD. Now, of course, the black line is starting to curl up. It could take a month or two to get that back up, crossing over the red line, and then we need a confirmation. So at the very minimum, probably going to take at least 3 months before we can declare the bear market over. If this happens, that was going to take a couple of more up months in February and March and possibly in April to get ourselves there, right? So a little bit too premature to say that we're out of the bear market here yet, but because we do have a bear flag working here. Again, we do have a lot of momentum in the markets right now, and that is a sign of liquidity right now, and we have a lot of people piling in, a lot of people coming in with FOMO, fear of missing out. They're worried about missing out on gains as the market continues to move higher. We're not worried about that, right? All we're worried about is paying attention to the price action and moving our capital in and moving it out as appropriate. All right. So let's take a look at a couple of other names over here. I wanted to show you a couple of names that are on my radar today of interest, and this one is of course Alphabet, Google, testing that 200 moving average here. I think between Google and Alphabet today, Alphabet and Apple today, we have both those companies coming out with delivering earnings after the close. I think we're going to see possibly some big huge buybacks announced, much like Meta did last night, $40 billion buyback, and of course the stock's up 30%. Don't see a 30% move for either one of these two stocks, okay? But certainly the momentum is there for a big move up, at least into the 110 area, 112 area. So I'm on some calls, 100 calls. I'm looking maybe to add a little bit more here. And as far as Apple is concerned, I'm playing both sides of it. I think that maybe we're at the point in the markets where players are going to be forgiving of bad news, right? And certainly if they come out with a large buyback, that may cushion the blow of anything bad that's coming out on the iPhones. I think everybody out there and their mother has really talked about the poor numbers that Apple's going to deliver on the iPhones this quarter. I know that fourth quarter retail sales numbers were rather disappointing, and I think Apple is going to prove that to be the case. Amazon, on the other hand, with earnings coming out, I think that they're going to come out with really strong guidance going forward. The stock has been up real strong in 2023 already, and I think we can carry that momentum out to about $115 to $116. As far as Apple's concerned, you can see this on this chart. We're right at that 200-day moving average right here, and that's going to be some strong resistance as it was back in October when it reported their earnings. But again, with momentum there and the bulls have supporting this stock price, we could get a move up to say 152 or so from where we're at right now. And if we do, that could probably be a spot to take some risk off the table if you're long. Probably best way to play Apple right here, maybe with call spreads, maybe a 5-point, 6-point call spreads going forward. So for the next several weeks. So that would be a good way to play it. So I'm going to lay it down there right now. Everyone, thank you very much for spending a little bit of time with me. I appreciate you guys all listening in, and hopefully you get a chance to join us in the chat room here over the next couple of weeks. And I look forward to seeing you guys all on Monday. Monday is going to be February 6th, and don't forget, keep some puts on, take some risk off the table. That's a smart thing to do, and then keep a lot of cash in there. This is still the bear market. Use the bear market playbook right now as you're proceeding going forward. All right, thanks everyone, and have a great day. And again, some like it hot, and as we do here in New England. Have a great day, everyone. See you Monday. Some like it hot, so let's turn up the heat till we fly.